Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for October 18th, 2007. Well, today was not Whipsaw Wednesday. In fact, it was Thursday, but it could have fooled me because it was very, very whippy. And the things you'll notice about this market is that we were up and down in every which way once more. And this is, again, normal on an Options X weekend. So, again, as we talked about this last Friday, Monday, Tuesday, this is almost expected. I mean, it's become the norm that every Options X week is just very, very whippy. And we've seen Fed decisions, Fed rate cuts, Fed discount rate cuts in the last few options expiration weeks. And this week, while there hasn't been a Fed decision, it's been extremely whippy nonetheless. And we saw the Dow ending down a couple points on the day, the S&P down as well, but the NASDAQ bucking the trend. However, this was not the way it was early in the day. Early in the day here, and you guys can see it, around 7 in the morning, the futures, and this is the ES future contract, dumped out huge. And that was a result of Bank of America disappointing the street immensely in their earnings report. And to give you a sense, they missed by about 24 cents, I believe the correct number was, and it was overall taken as a very bearish sign because it was not expected. They didn't come out and warn, they didn't say we're going to miss, they just came out and said boom. That's what it was. The market reacted negatively, it sold off hard. And you can see this, 7 in the morning, this is a big, big sell candle, and that's when it was announced. Overall, we basically sold off the morning. Here we are, opening the market right here at 9:30, and you can see the volume increase right around here. That's when the market opens, that's how you know the market opens aside from time. And as you can see, volume was mixed most of the day. The middle of the day, again, lighter volume. That's normal because of lunchtime and all that middle time. But look at what we happened here. We had this large sell-off, and then a little buck in the trend here, another sell-off, and then later in the day we rallied very, very hard. And you can see this rally right here in the ES futures took us all the way up here to the 200 moving average. And again, as we always talk about, that 200 is like a brick wall. It's like a metal steel wall. And it's going to be major resistance on the upside. And we saw it proved once again today as the piercing of that moving average hit. It did not close above that moving average, and whenever it hits that and does not close above, generally you're going to get a little sell-off into the close. And also, I just want to point out this here again is look at where this came down to in this market before bouncing into the close here. And I'm going to go a little forward. I had to show you 7 o'clock here, so we'll go in here, and here's a little bounce that happened towards the end up to 4 o'clock right here. Now, again, just pointing this out, look at this cross between two moving averages, all right? And when you see a cross like that, that's called a necktie, where two moving averages crosses, and then you get the price to come down to that point. It's extremely solid support or resistance. In this case, as the price comes down to it, it's solid support. So as a technical indicator, that's a definite area where you know you're going to see support, and it proved it once again. We went right back up to that 200. We couldn't break the 200 again, and we sold off a little into the close, and we just got choppy here and hugged this 20 moving average. Now again, you guys can see how key moving averages are, neckties, all these different terms. And again, there's some great books out there to learn the technical analysis ways, or you can take one of our webinars. We go over all this stuff. All right, and again, just notice the different levels here on the charts here with the moving averages. You have the 50 moving average right there. It comes right up to the 50 moving average. This is the 20. Look at it. Basically hugs the 20 all day long until the breakout later in the day. And again, these are just general points here that you can notice. We again saw the NASDAQ closing up, and this was based on this solid rally into the close, and I'm going to show you the NASDAQ chart here quickly. But you can see the NASDAQ was gapped down quite a bit all day, all down here. This is where the NASDAQ was down around 15 to 20 points in this area. Down here, down about 20, averaging around 14, 15 points during this whole period. Then again, starting about 1:30, you saw a nice, strong rally, very strong rally, possibly a short squeeze, possibly just a push up. This is again coinciding with oil. Oil moved up tremendously today. We saw oil closing up over $2 a barrel to 89.5 almost. All right, we're basically at $90 oil, and this is getting a little scary for those of us that have to fill up at the pump, even though we haven't seen a jump yet. It will come, trust me, it will come, and we will be paying much more for gas. So I encourage everyone to fill up while they can. But oil is a commodity basically used in all production of most things we use, whether it's TVs, plastics, whatever, it's used. Not to mention, obviously, machinery and everything else like that is run on it. So the fact of the matter is, $90 oil is getting a little scary. And this market doesn't seem to care right now. It's been a little jittery the last few days, but it hasn't seemed to really care. And the question is, do we top 90 tomorrow? My guess is we got to hit that 90 level at some point. It becomes that even number play that in the chat room everyone knows about. At some point you got to pierce that 90, and then you probably sell off back below 90 quickly. But at some point it's got to touch that 90 level. In any case, we'll look at the USO quickly, and you guys can see. And here's oil trading up most of the day, but really here's where it takes off in the afternoon. And this is the USO. The USO was up $1.54 today, and it was just a tremendous move. The OIH was up nicely today, 169, but percentage-wise not the same as oil, and that's because the slightly weaker market is having an impact on some of these oil services holders and different stocks. So it's not directly in relation to oil, even though it does generally follow oil. Now we also saw the GLD up strong again today. Gold was up, I think it was around $6 or so, generally in that range. And again, the GLD was up $1.50. And look at these daily charts. The commodity itself is just a monster, and this follows gold pretty accurately. And look at that run it's been on, from basically 64 to 76 here, and just an overall monster move. Now, what we did see after the bell here is some earnings. We saw Google come out and a couple other big tech names. And I'm going to show you the level 2 just so we all get a sense of here. Here's the level 2 on Google trading after earnings. Now, Google closed up $6.14 today, and it's basically trading right there. Now, one thing of interest, after hours, when it initially came out, it spiked up to $655, and then it spiked down to about $625. It was all over the map, back and forth. And here, interestingly enough, it kind of has come to an even point of back to flat on the day, which is right where it closed. It's trading right there now. Now, who knows where it goes tomorrow, but I just want to point out the interesting nature of this. Tomorrow's options expiration. Institutions have sold puts, they've sold calls on both sides of this general range. Where do you guys think they want the stock price to end tomorrow? I think we all can guess that generally they want it to be even-ish or in that range, because then puts and calls expire worthless. And you just kind of put your hand underneath your chin, your fist there, and kind of think about it. And just something interesting to note. And who knows? Maybe this price will change by tomorrow. This is still early and after hours. It's only 4:30 here. A little after 4:30, but that is something to note and keep in mind. People were playing that in options for a spike up or a spike down, and all in all, it's basically flat. So you had all those calls and puts bought on either side that are basically not going to get executed or not going to pay off. Okay, looking at a few other things here, I want to quickly touch base on one other stock that had earnings today, and it's up huge. ISRG here. This is Intuitive Surgical Inc. And what you guys can see here is that the price on the close was $256, and that was up almost $20 on the day. And look at this after hours, up another $20 or so. A little less than 20 to 273 by 274. Just a monster move on earnings. Again, it's giving a little boost here to the futures going into options expiration tomorrow. Futures here trading after hours up about 0.75. Not much of a move there at all. In any case, to go up over a couple other things, I want to quickly go back to the NASDAQ chart. Actually, we'll go to the SPYs so we can use that. And we're going to look at the daily. Now, we know we've been talking quite a bit about this channel that the market's been in. And I just want to point this out, and I keep on drawing this in general, right around here, give or take. In fact, we'll redraw that here so we get it a little more accurate. Now, you really want to have it touching from that point. This point is kind of an outlier, and I'm using that as an outlier to draw this channel. But if you draw from that point, it pretty much touches there, touches here, and now it's touching here. And I want to point out the fact that you're seeing this constant hit of that channel. And again, if you draw the top channel area here, you're seeing this portion right here. And you see it hit on the top, hit on the top, hit on the top. And we keep on pointing this out to you because it's so key. This is the channel we're in. Parallel lines, very accurate here. And we keep on hitting the lower end. And you see us every day. The NASDAQ and the SPY is lower here. Yesterday, we were all the way down here, piercing that line. But we could not close below it. In fact, they saved it and closed us above the 20. Now today, we did close below the 20 moving average, but they touched that line again, and we could not close below it. You have to take that as a very solid signal of support on this line. And in my opinion, we're going to either do one of two things. You're going to continue to hit it and break it and close below this line. Should we close below, the downside is very, very open here to a nice solid fall in the markets. And if not, if we don't break it in another few days, I would happen to say that this should bounce back up and go towards the top of this channel again. And as you guys can see, it's happened multiple times. You had a hit here, and it bounced up and hit here. Another couple times it hit here, and it couldn't break, and it bounced up and hit here. And then again, we had some time where it just kind of traded in the channel. It touched up here again, and then we have come down, and now we're hit once, we hit twice. So again, the point becomes, what do we do from here? Do we break it to the downside or break it to the upside? And that is really the key here, what we want to watch. And I want to point out here again, over this little sell-off, notice this little sell-off? Notice the volume's been a little on the better side. You know, here volume's light on the move up right here, and volume's a little heavier here on the sell-off. And that's kind of leading me to believe that maybe there is some more downside in this market. And, you know, I don't want to be bearish because you got to follow the trend here. And all I care about is that there's trades in this market. It's the key to me. As long as there's trading in this market, as a day trader, as a swing trader, I'll make money. That's fine. But I do want to notice the overall trend, or notice if we are going to break down. And there's a possibility here. We'll find out soon enough. All I know is you have to wait for a signal. A close below that line is a short. As long as it stays above, you got to respect the trend. Take care, guys. Have a wonderful day.